the big things, the two main hits that I want to focus on are the Big Beautiful Bill and prediction markets. So first of all, the Big Beautiful Bill, what is it? Why? And what do we do with it?
That's a great question.
Why?
Nobody really knows why. I mean, I think we have an idea, but yeah. So in July, they added the provisions of the Big Beautiful Bill, and you're going to be allowed to deduct 90% of your gambling losses instead of 100% of your gambling losses. The bad news for professional gamblers is the way that it's written. That also affects your expenses related to the gambling activities, because the bill did modify Section 165D of the regulations, so it will apply to both to losses and to expenses. So the bad news, or the good news, is it doesn't apply to 2025. So there's still some time for this to roll out and for everyone to understand it. The bad news is, as of right now, we do have to assume that it's going to take effect as of January 1st, 2026, because there has been really no traction with any effort to retract it before the end of the year. So January 1st rolls around, very unlikely that something will have been changed before then, and we'll have to just assume moving forward that it does apply. That being said, we still do kind of have the calendar year of 2026. Generally, if the IRS will make a change in the middle of the tax year that benefits taxpayers, they will make that retroactive. So it's not always the case, but in the One Big Beautiful Bill, there was the no tax on tips and overtime, and that was applied retrospectively to January 1st of 2025. So we can hope that somehow throughout 2026, whether it's February or December, that if something does happen and the revision is made, that it is applied back to January 1st, and then we won't have to worry about this. But in the meantime, we do need to be aware of it. So anybody that does any sort of gambling is going to have to make sure that they do have as accurate of records as possible. That way, if there's a change in the law, or there's a change in what a session is, or there's more information that the IRS gives us, we have the underlying data to then apply that to.
So this provision affects professional gamblers and it affects recreational gamblers. This isn't just for the professional. It seems like it's a bigger hit for the rec gamblers because they don't have expenses in the first place to write off. Is that?
It depends. It's probably going to affect high volume people, or definitely will affect high volume people more than low volume. So you might have some high volume rec gamblers that are just playing slot machines, and it seems to them that they have a lot of winnings and losses throughout the year. Then you're also going to have high volume professional gamblers who are sports betting or advantage playing and doing something similar, and they're also going to have high volume. So for rec players, I'm not going to say all of them, but a lot of rec players are already losing in the first place. So if you have $15,000 of winnings and $45,000 of losses, well, it doesn't really matter that the 90% provision applies to you, because you're still going to have more losses than winnings, and it's going to still be a wash. Whereas a lot of the professional gamblers are going to have profit, and that 90% loss, or the 90% provision, is going to kind of cut into their profits.
Okay, so that brings us to a question that a lot of people ask. What defines a session? How do we define
sessions? Yeah, it's going to be obviously something that's going to be highly debated throughout the year. There's a general idea of what sessions are, and it does vary by game type. So if you're going to a brick and mortar casino and you're playing slots, it's going to be a continuous time in that same casino, generally extended. There's a safe harbor that the IRS put forth for 24 hours. Again, that's going to be very similar for table games, but again, it's by game type. So if you go to the same casino and you play slots and you play table games, you're going to have separate sessions. The world of online gambling is kind of where it's a little bit more up in the air. Take poker, for instance. If you have a continuous session where you're playing 50 sit and go tournaments, well, every sit and go tournament is in itself has a discrete beginning and ending. But that continuous session, general advice would be, you can count all of those tournaments as one session and take the net result. Same with cash games. If you're playing poker, playing multiple tables, same game type, same session. So really the big question is going to come down to sports wagering. And is it going to be, is every individual wager a session? Is it going to be every individual event? So if you have multiple wagers on the same game, can you net those out? Is it going to be every book by day? Is it going to be just every day. I think you can make an argument for any of the four of those. The hope is that at some point we get some type of guidance from the IRS that says this is going to be acceptable or this isn't going to be acceptable, just because there's going to be a various amount of interpretations of that. And it would be a lot better for everyone involved if we had more guidance so we can make sure that everybody's doing it the way that the IRS intends.
But we've never had any guidance, even when we were going through the poker boom. They never came back with anything. So we've been dealing with what is a session for decades now at this point.
Yeah, that's true. And the only reason I'm hopeful in this stage is because of this provision. It is now a lot more. It's going to be affecting a lot more people. So previously, it's still recreational gamblers. We're still impacted by what the definition of a session is. But now, since there's this 10% penalty, it's going to be impacting everybody a lot more. So I would hope that the IRS is aware of this and is trying to help those people who are again trying to file everything correctly. There's people out there that are probably going to take the session definition into their own hands, but we're hoping that we can get some type of guidance that way. Yes, you're right. In the past, we haven't had anything, but maybe this kind of spurs the IRS to publish something.
So this brings me to another question that I was going to ask later, but it's appropriate now. Is there any reason why a professional gambler, should incorporate or file as self-employed? Because, well, is there any reason that a professional gambler should incorporate that benefits them regarding the big, beautiful bill? Is there anything that I'm not thinking of that makes it better for them?
Generally, no. If you're filing as self-employed, you're your own business, right? So you don't necessarily need to have an LLC unless you want some type of legal protection. But if it's just you, you're going to be taxed the same whether you have an LLC or not. So the way in which the income is going to be earned, either in a sole proprietor as self-employed, or if you had an LLC and taxed it as an S corp, it's still going to be gambling in nature. So the 90% provision is still going to apply. There may be some extraneous solutions that I'm not privy to, but in general, you're not able to change the nature of the income as it's earned. So whether it's, again, individually as a sole proprietor or in an S corp, it's still going to be gambling winnings and gambling losses.
Okay. And while we're on the topic of incorporating, there are a lot of partnerships, especially with sports betting. You usually have partners betting for you or splitting the action, different parts of the country, whatever it may be. Can you explain the best way to deal with those partnerships tax-wise? What needs to be done between the parties to comply with filing taxes?
Yeah, I mean, the best thing to do we're going to say this multiple times throughout, but is to have detailed records of everything that happened. So if you have multiple partnerships across different platforms or people, you have whatever way in which you keep records. You say, hey, this is John Smith's DraftKings account, and this is the wagers that we have going, and here's what the percentage split is, or whatever it may be that you're doing with him. And you make sure you have accurate information for that for the whole year. The underlying information is the important part, because we may or may not know. You'll know what the arrangement you have with the partner is. But if you just have one number that says, hey, well, I ended up paying him $10,000 as a result of our arrangement, it doesn't give us the full picture of what we need to make sure it's reported correctly.
Okay, but these records that are kept, they don't go to the IRS. They're for us. If the IRS comes back to us, explain yourself. I want to make that clear.
That's right. And the tricky part with partnerships or other arrangements is that sometimes the records won't be in an account that has your name on it. So you want to make it explicitly clear that, hey, it's like if you are backing somebody in a poker tournament. Sure, they won the poker tournament, but then they sent me my half of the money or whatever it may be. Similarly, if somebody else is wagering for you, or there's another account wagering where you have a portion of that, it's not going to be tied from a third party to your name. So it's very important that you not educate, but if you were audited, you'd want to show the IRS what's happening, and you'd say, hey, look, here are the accounts that are in my name, and here are the other 10 accounts where I'm still earning income from these accounts, but they're not directly tied to me, so I can't get you, a third-party DraftKings statement with my name on it, but here's exactly what happened. And if you can lay that out, the actual underlying transactions of what's happening is the important thing and will drive the taxability of everything that's happening.
And we've had this conversation in real life, and this might be above this podcast, but how do you feel about having partnership agreements, like something on paper? This is a legal question, with everyone you work with.
Yeah, I mean, not a lawyer, but in general, if you're working with somebody, I would say it's definitely important to have that underlying basis from a partnership perspective. And
Mm-hmm.
then if what you're doing rises to the level of a partnership from a tax perspective, that partnership agreement would then be the defining rules and regulations, if you want to call it that, of the partnership that shows who's putting the capital in, who's doing the work, what the split of the profits are. And that's more of a formal partnership. Whereas if I'm just taking somebody to a poker tournament, that probably doesn't rise to the level of a partnership.
I've had conversations with lawyers who were very uh, multiple, who thought that I should have a partnership agreement on paper with anyone whose account I had action on. So if they had an account and they had my information and they're betting, they're taking a piece of the action, so it's all kosher. That I should have a written agreement with everybody, and that seems so excessive. It's just so excessive. I don't know how you feel about that. You're probably for that because I know you like to be able to track everything.
Here, I work with a couple of attorneys, and if they recommend something from the legal side of things, I will
Mhm.
always defer to them. But from a
Right.
tax perspective, whether it's, I mean, an agreement's never going to hurt anything, right? If you get audited
Mhm.
and you say, hey, here's my agreement that I have with player A, and here are the bank transactions that I have that show that money is going back and forth between myself and player A, and here are all the wagers that I tracked that player A and I made together. That gives the IRS a bigger picture of what's happening instead of just taking your word that,
Mhm.
yeah, I gave this guy $20,000 and we were placing wagers together and I profited $10,000. So what it does is it legitimizes the transactions and then also provides that paper trail for somebody to follow that. All of us are in this space are familiar with this type of arrangement, but if you talk to somebody outside the space, it's kind of foreign.
Yeah.
So the more you can explain it to them with third party information and facts and figures, the easy it will be for them to understand.
Okay. While we're on this topic, how should we keep track of crypto transactions?
The best that you can. I understand that this is going to be difficult.
Yeah.
In a perfect world, you
Mhm.
would track everything that you do, and you want to make sure that you have the definition of what needs to be tracked first of all. So
Okay.
if I'm depositing money to a sportsbook that only accepts crypto, I'm
Mhm.
technically selling that sportsbook crypto. So I may have had this Bitcoin from a year ago, but now I'm depositing it. I need to know what I purchased the Bitcoin for because now I'm going to have a capital gain or loss when I quote unquote sell this to the book.
Mhm.
The same thing will happen if I withdraw from a book. As soon as I withdraw, I'm technically purchasing it at that price for that day. So then you have to make sure that you track the basis for that because when you purchase crypto on an exchange, if you're buying and selling on the same exchange, they will most of the time track the basis for you. You
Mhm.
won't have to do much about that. But as soon as you start transferring crypto in from other places or it goes to a hard wallet and then comes back to your exchange, the basis generally gets lost. So there's a lot of manual labor that needs to go into that to make sure that you have the correct basis because there are good software out there that will track your um, that will track the capital gains and losses for you. But if you
Mhm.
don't have the basis to go along with them, the software can only deal with the information that you give it. So long answer short, it all comes down again to record keeping and
Yeah.
making sure you know which transactions are taxable and which ones are not, and making sure you can track or keep the basis with the coins that are being transferred.
Do you have a preference for software for crypto tracking?
I don't. The interface of most of them seems to be pretty good. So
Mhm.
Coinly is one that I tend to see a lot of people use, but I
Mhm.
also know that people have that vary depends across which interface works best for them, or maybe one of the exchanges that they have just exports easier to one of the other software.
So if you're gambling with crypto online, but you don't exchange that crypto to a USD value on the site, can you treat that win or loss? Uh, I deposit one Bitcoin at 100K. I gamble with that Bitcoin. I withdraw one Bitcoin and it's worth, $101,000. I won $1,000. Is that correct?
Yeah, the problem is if you play on a site that does not transact or does not exchange your Bitcoin for USD or whatever it is, every time you gamble, you're having a taxable event from a capital gain loss standpoint and from a gambling standpoint. So you're
Okay.
basically wagering one Bitcoin, you're selling it for not one Bitcoin, 0.1 Bitcoin, whatever
Yeah.
it might be, for that wager. And then the result of the wager, you might win. Great. So that's your gambling win and loss. But you're also getting back a new coin at a new cost basis, which you then have to track. So from a tracking standpoint, I can't say that that is going to be something that you're going to enjoy, just
Yeah.
because people who gamble on those types of sites, I'm
Mhm.
fairly certain that many of them will not have accurate records just due to the kind of cumbersome nature of that.
Let us move on to prediction markets. Prediction markets are gaining in popularity and they are not characterized as gambling platforms by the government. So, how do you feel about prediction markets? How should we file our wins and losses? What is your opinion?
Yeah, so prediction markets right now are kind of operating in the same legal zone, gray area, if you want to call it, as sweeps casinos.
Mm,
Um, there's no guidance on it, but DFS was kind of the same thing. When it first rolled out, nobody really knew if it was gambling or not. They still claim that they're not. But from a tax perspective, the IRS has made it pretty much clear that daily fantasy sports is going to be a gambling activity, so we treat it that way. We look at the same thing with sweeps. The nature of what's happening. I mean, you are gambling on those sites, right? So it's very hard to make an argument that it's not gambling in nature. So those, my opinion, sweep sites, those would all be gambling winnings and losses. And then when you get to prediction markets, it follows the same line of thinking. So it's not exactly the same, but as of right now, there is no guidance on it. So if you look at it from a more of a logical standpoint, it seems like it's gambling. I mean, they have events-based contracts, whether it's sports or otherwise, where if you look at it from a tax perspective, it does seem like it's, a thinly veiled way to gamble. I think everyone would agree with that.
mm,
That being said, there is no affirmative guidance on that. So if somebody did want to try to treat it as a capital gain or loss, I'm sure they could. I don't think that that would be appropriate, but there you might be able to come up with some type of substantiation for that and file it as such on your return. I really do think it comes down to kind of the underlying assets that are associated with the contracts, if you will. So Section 1256 contracts usually are in commodities or equities or some type of underlying asset, whereas
mm.
these prediction markets have events-based contracts. So there is a difference there, but without any guidance from the IRS, there's not going to be anything definitive. You just kind of have to use your best estimate. I think we've all kind of seen that there's people that will that's what I'm trying to say. They will
Argue.
benefit from
Mm.
prediction markets not being gambling winnings and losses. So people are going to
Mm.
obviously make that argument, and I understand that, but I'm just trying to look at it from an objective standpoint.
Do you feel that because they're characterized, the CFTC is regulating them, I guess, does that make a difference in how the IRS? I feel like if this is my opinion, if you don't characterize those results as wins and losses gambling, I feel like saying, well, the government, the CFTC is behind these businesses, so it's not really gambling. Like, do you feel like that will hold any weight with the IRS?
Yeah, I mean, from what I'm aware, I'm not an absolute expert on this, but
Mhm.
the sites like Kalshi or companies that are kind of with the CFTC, they can offer contracts that are 1256 contracts, but they can also
Mhm.
offer contracts that don't necessarily fall into the same category of those contracts. So just because Kalshi is offering something that may be considered a contract that's subject to capital gains or loss doesn't mean
Mhm.
that all of the contracts offered on their site are. So
Okay.
the underlying facts would be, from a tax perspective, what's actually happening here. And again, I think it's going to be gambling based, but there might be something that comes out that changes that with kind of the way that the current legislation is going.
Okay, so across the board, everything they're offering, some might fall under Section 1256 and some just might not, and we don't know. Like the user has no idea. Is that what you're saying?
Yeah, I mean, as of right now, I don't
Mhm.
think I think we're all leaning a certain
Yeah, yeah.
way. That doesn't
Mhm.
necessarily mean that that's correct, but yeah, as long as you have a substantiation for your position, the IRS will allow you to take it if it's reasonable. So if you can make a reasonable claim as to why something should be treated some way, then you can obviously take that position. It just doesn't mean that the IRS is going to agree with you.
Okay, so how the government taxes prediction markets, does that have any effect on how the user of a prediction market should file their taxes?
It does not. So you'll have sites like the Sweepstakes or DFS sites where they issue you 1099
Mhm.
miscellaneouses. But the nature of the income trumps the form that the income is issued on. So if you receive a 1099 miscellaneous from DraftKings, which for daily fantasy sports, which you would, that shows your net profit for the year.
Mhm.
We know as end users that that form only represents your net winnings. You still are required to report your session wins and losses. So we
Mhm.
don't let the tax form dictate the way in which the income is reported if we know that it's not correct.
If someone filing their tax returns treats prediction markets as capital assets, treats their transactions as capital assets, does the big beautiful bill provision play a part in that 90%, 100%? Does that are we getting rid of that problem? I guess I could say.
I can't say with certainty, but it would seem that if you're treating it that way, then it would not apply to the 90% provision because it seems like the provision is really applicable to gambling winnings and losses.
Mhm.
So any type of contract, any type of prediction market contract would probably get the same treatment as any other futures contract that's out there that's based off of equities as well, and those are not going to be impacted by gambling. So I can't say with certainty, but it would seem like those would be exempt from the provision since they wouldn't be classified as strictly gambling from a tax perspective.
Okay. And even though betting exchanges are peer to peer, does it matter? There's a on one side there might be a market making organization. Does it matter how that organization is taxed? Because I don't think they're taxed as gambling wins and loss. I don't think they're taxed as a gambling company on their end. So that seems like a pretty good argument for the user to not file their taxes as gambling wins and losses, the results on prediction markets.
Yeah.
This,
So yeah, again, we will default to what's actually happening. So
yeah,
the exchanges are really just acting as intermediaries, right? To find people to connect.
right.
So if I'm here and you're there, and we both like different sides of a football game, we could have a wager with ourselves. But there's just no intermediary because we found each other.
Mhm.
It's still gambling winnings and losses, regardless of how we're being connected.
Okay, that makes that makes perfect sense. I guess my overall like overall questions regarding prediction markets is, well, if the government treats the company like this, does it affect the user? If the market making organization is treated like this, does it affect the user? But nothing affects the user. Like if it's gambling,
So
it's gambling.
yeah, I mean, the main problem that we see right now is that companies, whether they're sweeps, DFS, prediction markets, they are essentially self-assigning themselves into these spaces and they're waiting for the government to make some type of ruling, right? So in
Right.
certain cases, sweep sites have been banned from states because the government is saying that it's unlicensed or unregulated gambling, and they've
Mhm.
left the state. So really, it's that move first and then see if there's consequences later approach from a lot of these sites. So we still need to take a look at the underlying facts of what's happening. And then at some point, you would think there is going to be some type of regulation or guidance out there that kind of addresses this. But right now, there isn't anything that addresses it. So the uh, the the onus falls onto us to figure it out.
Okay. And we've mentioned sweeps a few times. I think we agree, and probably most of the gambling community agrees, that if you're playing on sweepstakes sites, sweepstakes casinos, that's gambling income. It just is. There, it just is.
I
I
don't
don't think.
I don't
Yeah.
see any way around it. I mean, you can explain this to somebody that doesn't know anything about gambling, and if you say, hey, you're basically just trading real money for what is not real money, and then you're playing the
Mhm.
same exact games that they offer in regulated casinos, I don't really think there's any way around that.
Yeah, I agree with you. What makes a professional gambler versus a recreational gambler? What constitutes a professional?
Yeah, it's the manner in which you carry out your activities. So I would say in general, the IRS will default everybody to a recreational gambler. And
Mhm.
then those people whose activities rise to the level of a business would be those people who are professional gamblers. So you don't get to choose which one you are. There's no black and white, absolutely yes and absolutely not.
Mhm.
But you don't get to say, hey, I want to file as a professional gambler because it'll reduce my taxes. If you're filing as a professional gambler, you should be treating it like a business, which means you are running it like a business. You don't necessarily need to have a separate bank account and a separate credit card, but those are things that would make it obvious to the IRS that you are doing that. Then you want to make sure that you have documented processes, or that over the long term you're going to be profitable, or if you're not profitable, what's been happening so that you're not, and kind of show that the history of that. You're going to want to show the amount of time that you put into it, and kind of again what your philosophy is behind it. You're not just betting some parlays on a Friday or just random
Mhm.
NFL games. You might have certain sports that you have, or you're only betting markets. You're not betting, you're just betting numbers. You're not betting teams. Really, it goes into, there's a lot of different factors that go into it, but generally, after you kind of outline your position, or if I hear somebody outline their position, it's pretty clear if somebody should be filing as self-employed or not.
And should one of the considerations be that the bulk of your income comes from gambling, or does that not matter?
It's one of the considerations. It's not the only consideration. So
Okay.
if it's your only job and you don't have a ton of income coming in from it just because it's a down year, then yeah,
Mhm.
you're still a professional gambler because it's your only source of income if you kind of meet the rest of the qualifications. If you have other work, you have a W-2 job or whatever it may be, then yeah, the onus might be a little bit higher on you to see if you hit that threshold, because
Mhm.
you might just be doing it on the side, and it's not professional, or you might be putting the time in, and yeah, you probably need to show a little bit more income from it to make the IRS to hit that one rung of the guidance. So again, it's not the only one, but it is one that the IRS will consider.
I'm thinking about my own experiences, and you are my CPA, and we've done this before. I make money gambling. I've been filing a Schedule C for forever, and I pivoted to entertainment, and now I've been making money writing, doing other things, and so we actually filed 2 Schedule Cs. So that would be the way to do it. I'm still gambling, I'm still a professional, but then I had a Schedule C for my other business. So that would be the
Yeah,
correct way to do it.
yeah. I mean, things change. I'm not necessarily saying you should be changing from professional gambler to recreational gambler every year,
Mhm,
but if you're going to take a step back from gambling for a set amount of time, and that you're just going to be doing it every once in a while, I
mhm,
mean that's probably not professional gambling. Now, you can make the case that you're still involved heavily from that time period. So maybe there's just 1 month a year, right? You go all out and that's all you're doing. Then yeah,
mhm,
then I would probably say Schedule C. But if it's just 1 week, one weekend for the year, a couple times a year, then all right, you're probably kind of back to recreational based off of kind of the facts and circumstances. So it does vary widely, but generally you'd keep that consistency if the time and effort and results are the same from year to year.
okay, and this question's come up before, and I know the answer, like, at what point do you have to declare you're a professional during the year? And it doesn't matter. Whatever if I started gambling professionally in September of this year, well, then 2025, I'm a professional gambler. Am I saying that right? Like, there's no.
Yeah, so I mean, what'll end up happening is any income that you have prior to that date. Let's just say you didn't really spend a whole lot of time doing it up until May, and then after May you went full into it. Then
Mhm.
you would file as a professional gambler starting in May. So any income that you earned prior to that would be excluded from your Schedule C. It would just be shown as recreational gambling winnings and losses, and then your business would start as of whatever day you went ahead
Oh,
and started doing it full time.
okay, so I said that incorrectly. But okay, I did say that incorrectly. But there's no form you have to file that says, "Hey, I'm a professional." You
No.
file starting, right? Okay.
Correct. Yep. When you
Yeah.
file your tax return and you file Schedule C, you're alerting the IRS that you have self-employed income of some kind. So
Mhm,
whether you're doing car detailing on the side, or consulting, or professional gambling, the
mhm.
Schedule C will dictate that. It doesn't show that, hey, I was self-employed from May to December, but
Okay.
your underlying records that you have will show that and support it. And if ever needed, you'd provide those to whomever at the IRS to show the substantiation.
Okay. You said that a lot better than I did. Thank you. Write-offs. Let's talk about write-offs. Can recreational gamblers take write-offs, and can professional gamblers take write-offs, and what can those write-offs be?
Yeah, recreational gamblers are limited to gambling losses. So they'll show their gross winnings from their gambling sessions, and they'll be reduced by their gross losses from their gambling sessions. That's the extent of the deductions that recreational gamblers can take. Professional gamblers are treated the same as any other self-employed individual. So any expenses that are ordinary and necessary throughout the course of their business can be deducted. So whether it's travel, meals while traveling, subscriptions, equipment, payouts to contractors, consultants, bank fees, whatever it may be, if it's necessary for the business, then you can deduct either 100% of it if it's a full business deduction, or a portion of it if it's a split use between personal and business use.
Okay. And to be specific, like I live in Nevada, I live in Las Vegas. If I'm working for the day, I'm playing poker for the day wherever, let's say Bellagio. When I go to eat at Bellagio, can I write that meal off when I take a break from the table, leave the poker room, and I'm in Las Vegas where I live? Can I go write that meal off?
You cannot. So
Right.
meals are deductible if they're in business in nature. So if you're meeting with a coach, a client, whoever it may be, and you guys are discussing something that has to do with your business, or you're traveling, so you're out of your place of residence for more than a night, or it's deemed to be far enough to where you're traveling, then the meals that are business in nature from your travel are going to be deductible.
Okay, but I can write off my mileage from my house to the Bellagio, Bellagio back to my house, back and forth.
If you have a home office, whereas you have a primary place of, or it's going to be for business use, then you are able to do that. If you're just commuting from home where you don't have an office and you're just going to a casino, then those miles are not deductible. So you're only allowed to deduct business location to business location mileage.
Okay, home office. Got it. And then obviously we can deduct subscription fees and training fees and equipment at home that we might need to use to practice our craft.
Yep.
Okay.
Any type of subscriptions, computers, monitors, laptops, tablets. Again, if they're split use between personal and business, you have to just track that usage the best you can, and you'll get the percentage business deduction for that.
Okay. And specifically, this is a small group of people, but for blackjack players who wear different outfits in the casino so they can look different, you cannot write those off. We've had this discussion. I cannot go buy new outfits and write those off. Correct?
Yeah, clothes are going to be very tough.
Okay.
99% of the time, clothing, unless it's a uniform that's required for the job, think protection equipment for people that work in an industrial plant or something like that, it's not going to be deductible. So basically, the IRS says if it's deemed that it can be used outside of a job, then you can't deduct it. So even if you go buy a suit or a dress, whatever it may be, the IRS is going to say that can be worn for personal use as well, and you're not going to be able to deduct it.
Okay. And these are things that on your taxes, do you have to put exactly what you're taking the deduction for on your tax form, or are these private records that we just need if they come back to us?
The tax return shows a summary of expenses. So they'll
Okay.
see your travel expense is $5,000, but they won't see that it's made up of hotels, airfare, ground transportation. It's all bundled into one summarized category. So your underlying records will act as your general ledger, if you will, and it will itemize all of your expenses. And when necessary, if needed, you'll have all of your expenses that total that $5,000 travel expense, and you can either provide the receipts that show them or whatever information the IRS requests to substantiate it.
You don't gamble, you don't play on DraftKings, you don't go to the casino. You just play prediction markets, and you're not treating it as gambling wins and losses. Can you write anything off?
No, if it's going to be capital gains and losses, the only thing that impacts capital gains and losses is your purchase price, your sales price, and any potential expenses of sale. So just like if you're buying stock, the same type of treatment would apply to the futures contract if that is the way you choose to treat it.
Okay. Got it. Rewinding a little bit back to partnerships. In general, what if I have a partner and we have multiple accounts, some in their name, some in my name, back and forth, whatever it may be. what tax documents should we be exchanging with each other?
It depends, but most likely it's going to be a 1099 of some kind. So
Okay.
ideally, it's going to be one from each partner to the other partner, because one partner is going to be transferring their portion of winnings to, partner A is going to transfer their portion to partner B, and then
Mhm.
partner B is going to have potentially different wagers, different winnings and losses, and they'll transfer partner A's portion back to them. So just from a clarity standpoint,
Mhm.
sure, if my portion of the wagers are up $20,000 and I'm working with you and yours are up $30,000, it doesn't make sense for me to send you, from a logical standpoint, send you the 20 for you to send me back the 30. But from a tax standpoint, it makes it a lot cleaner if I say, hey, here's your 20, and then you send me separately my 30. We issue tax forms that capture both of those things happening. That way the IRS is very aware and it's clear to them, okay, yeah, there's not just a netting out here. There's two separate things that are happening. Is
Mhm.
that absolutely necessary? Probably not, but it doesn't hurt in these situations to have more documentation.
Okay. And this recommendation is for people who file self-employed Schedule C and people who don't, correct?
Anybody. Yeah,
Okay.
anybody.
Gotcha. Um, let's talk about professional gamblers and retirement. Do you have any recommendations how a professional gambler could contribute to their IRA or to a SEP or whatever?
Yeah, so it comes down to personal preference, but you have
Mhm.
two main options if you're filing as self-employed to contribute to retirement plans.
Mhm.
You can do a solo 401k if it's just you, or you can do a self-employed pension plan, which is a version of an IRA. In either scenario, you're going to have different contribution limits. So in certain circumstances, for solo 401k might be better because you might be able to contribute more. In
Mhm.
other circumstances, you might just think it's easier to have a self-employed pension plan called a SEP plan, and you might just, go for that one instead. But in general, you'll be able to contribute about 20% of your net profit to either plan. And then the solo 401k also allows you to contribute up as an employee. So just as if you have wages and you're contributing through your W-2, you can contribute this year up to $23,000 as an employee. The self-employed solo 401k allows you to do the same thing. So you can contribute that 23,000 plus 20% of your net profit.
Okay, so you're kind of double depositing into your retirement accounts from both sides.
So it depends on how much money you're earning through this. But
Mhm.
if you have a smaller net profit, let's say it's $50,000,
Mhm.
if you're really looking to get money into a retirement account, you can contribute $23,000 because it's a dollar for dollar. As long as you make $23,000, you can contribute that as an employee.
Mhm.
But then separately from that, you can do another $10,000, which is 20% of 50,000. So from a solo 401k standpoint, you can contribute $33,000, which if that's what you're looking to do, that's pretty substantial. Whereas if you have a SEP plan, you only get the 20%. So you're looking at about $10,000 of contribution.
Okay. Sticking with this theme, do you have a recommendation for how a professional can build their credit, or what would look best for them to go apply for a mortgage or something like that?
Yeah, so any self-employed individuals, I would say, if as soon as you know you're thinking about doing this, I would reach out to lenders and I would say, develop a relationship with them. Say, hey, look, I'm self-employed. I'm looking to get a loan within the next year or whatever it may be.
Mhm.
What's the best information for me to have to provide to you? That way we can have my income substantiated. So it might be a tax return from last year. It might be 12 months of bank statements. It might be a year-to-date profit and loss. Each lender kind of has different internal processes that they have. But I would just be aware of what that is. That way, you know what you need to track for the coming year or whatever the time period is. And then that way you can give them what's needed. And there's no surprises. There's no trying to go back and amend 2 to 3 years of returns because
Mhm.
you didn't think it was done correctly or something like that. You're already aware of what needs to happen.
Okay. And you mentioned how I mean, we need to keep track of everything as well as we can, but I think it's just an important point to make that the best practice is to have separate bank accounts and separate credit cards for your gambling and your real life. Like, it just makes life a lot simpler. And even when you have partners and you're exchanging money back and forth, to have that separate bank account, money in and out, just it makes life a lot easier. So if someone's not doing that, they should be doing that.
Yeah, definitely. Especially so from bank transfers perspective, I think
Mhm.
it's a lot easier. But from a credit card perspective, it's hard for you to say, hey, I have these Amazon purchases that were related to the business, and I also have these Amazon purchases that were related to my personal. If you're trying to go
Mhm.
back January of
Yeah.
2025 and figure out what's happening, it's
Yeah.
tough.
It is
But it's
tough.
also easy. It's also easier because if you have a separate bank account and you need to present that to the IRS, you only
Mhm.
have the business related transactions there. So if you have 12 months worth of bank statements where everything is commingled, you have to tell the IRS, hey, every single one of these transactions is X, Y, and Z. This is why it's not taxable. Whereas if you have your business account, all you have to do is send in your, not always, but most of the time they'll just ask for the business related transactions. You
Mhm.
present all of those to them, you tie off those numbers, and it's better than having to go through all of your transactions.
If you're playing online with credit cards and you are getting cash back on those credit cards, should that be part of your gambling income?
In general, cash
Yeah.
back on business related expenses is seen as a reduction in basis of whatever it is that you're purchasing. So
Okay.
if you buy a laptop with a business credit card and you get cash back,
Mhm.
the cash back reduces your basis in the laptop. So let's say it was $1,000 laptop and you get $10 back for 1%,
Okay.
whatever it ends up being. Your basis in the laptop is $990, so you can only deduct $990 worth of expenses because of the cash back. In the cases where you are purchasing
Money.
sweeps coins,
Yeah,
yeah,
okay.
things that have a 1-to-1, right? So
Mhm.
your
Mhm.
basis in it is going to be 1. Technically, what it's doing is reducing your basis in that item, and it would be reducing your losses. The easiest thing to do is probably just recognize it as income instead of a reduction in losses to something that is just a placeholder. It's essentially as if you're just churning it, right? So
Right.
yes, in either scenario, it's taxable income. One is just showing it as income. The other is just reducing your expenses, but it has the same net impact on the business income, which is it increases it.
Okay. I will say I know a handful of people who use credit card points, cashback as part of their operation, and it's definitely a
Cool.
conversation that's had often.
Yeah, I mean, cashback seems to be relatively straightforward.
Mhm.
Um, there's there's a court case out there where the court actually ruled in the taxpayer's favor, but
Mhm.
essentially what they said was, had the IRS presented this point, which was kind of similar to what I was talking about, that
Mhm.
they would have ruled in the IRS's favor. So there is a tax court case that ruled in a churner's favor, for lack of a better word,
Mhm.
but it's taken with a grain of salt because they basically just the IRS made a bad argument, and we kind of know that now.
Okay. Is there anything that we didn't talk about that professional gamblers or recreational gamblers should be aware of? Is there anything I didn't ask you?
Probably, but we did cover a lot, so I think that's good. I mean, I think the good thing about these conversations is that it spurs additional questions that at
Mhm.
some point we can answer, or it just gets
Mhm.
people thinking about it. I mean, really, the best thing that anybody can do, like I talked about, is just track everything. Because
Mhm.
if you have tons of questions and you don't know the answer to them, if you have the underlying data, we can figure it out. If you don't have that data, it's very hard to determine what needs to be done. So as long as you have, if somebody comes to me and has all the information, it's just maybe slightly disorganized, we can
Mhm.
work through that. If you don't have any information, there's not much I can do because I wasn't there with you. I can't help you with your sessions because
I
you don't know
feel
the answer. I wish I could. I
I
wish I
feel
could. I just
singled
can't.
out right now. I feel
No,
feel
if
like
there
this
was
is
a
directed towards me.
no, if there was a way to make sure that all these sessions are being recorded, everyone would be
Mhm.
in a better spot. It's just I understand the nature of how everything works, and it is challenging. But at the end of the day, if you have everything, we can make it work.
Okay, and I will say, from talking to you, if you're consistent every year, if you decide that a session is a day and you're consistent year after year after year, that makes you look more, I don't know if legitimate is the right word, but it looks more morally correct in the eyes of the IRS, like you're doing it the same all the time.
As long as it's reasonable. If you come out and say
Okay,
a session is every year, then I would say no. I mean, you are consistent, but it's probably
right,
not something that could be defended. If you
okay,
do have something that is reasonable, then
yeah,
again, it doesn't mean that the IRS is going to agree with you, but it does mean that you can present your case to an agent, appeals, tax
mhm,
court, wherever it may be, and hope that they rule in your favor.
okay. Well, this was a great conversation, as always. I always learn something new. Every single time we talk, I learn something new. And I hope that people watching this do also, because the big, beautiful bill and prediction markets are causing people to ask a lot of questions. So, but the answer as far as prediction markets, just to like put this all together, is it depends and it's your opinion. But
Yeah,
if you want to be
it's
safe, it's gambling.
yeah. I mean, it's tough. There's so much ambiguity out there right now,
Mhm.
and it does require judgment calls. You
Mhm.
have to just make sure you're comfortable with the judgment call that you're making, because at the end of the day, even if you go to a tax preparer, you are ultimately signing off on the return as well. So you have to make
Mhm.
sure that you're comfortable with the position that's being taken.
Okay. Great advice. Thank you for this conversation. If somebody wants to talk to you, where can they reach you?
Yeah, I would say the best thing to do is just go to my website. It's ZakThecCPA.com. It's just ZakTheCPA.com. And it has
Mhm.
my contact information. You can send me an email, or you can drop me a contact us. My goal is to try to help as many people as I can. If you have
Mhm.
general questions, we can set up a call, or I can let you know kind of what services we offer, just so everyone kind of has that awareness. And honestly, I would do it whenever the questions arise. If you wait till the end of the year, it's challenging, just because the entire year has happened. If you have a question
Mhm.
that something pops up in July, whether you speak to me or do research on your own or talk to anybody, right? Just do it as it pops up. That way you can address it, and then moving forward, you can be proactive about everything.
Okay, great. Can you do taxes for anyone in any state? Are you licensed?
Generally, yeah, generally, yes. I work with clients across the country, so obviously some states have income tax, others don't.
Mhm.
But generally, I'll be working with people in most of the states.
Okay. All right, great. Well, thank you for talking to me, Zak.
Absolutely. Thanks for having me on.
Okay. All right. Bye.
Bye.